So yeah, thank you all for coming onto this, taking the time and coming online. We basically face some unprecedented times at the moment, and this whole webinar is basically to try and just go through the whole wave of information that's been released, all the support, go through who's eligible, like what's available, who is it for, how do you claim it, and any tips and tricks and stuff like that, or anything you need to bear in mind to do this side of things and to make sure that you're getting the support you need. There is announcements later today for self-employed people and company directors and stuff like that. So we're really hoping that there's some more stuff there, because the self-employed aspect is kind of a little bit light on the ground, but we are going to touch on all the stuff that is available across the different areas. So just to go through, I am Ben Nacker. I am founder of Cone Accounting. We work with small digital businesses, e-commerce, creative agencies, all those kind of things. And our role is to, at the moment, is to try and help our clients and our wider community as much as possible through this time, because everyone's going through this together. And the more we stick together during this, the stronger we will be and come out of this the other side. Basically, that's what we're going to go through. So we do have a number of different support available in terms of, we have our business hub. It's at wearecone.com/coronavirus. We've kind of collated a lot of stuff I'm going to be talking about today on there, but I appreciate it's tons of information and this is sometimes more digestible content for you. We've also got cash flow sheets and like a cheat sheet, kind of help sheet thing as well, of all the different stuff that we're going to go through today as well. So you can find all those bits and pieces there too. So what we're going to go through today, we're going to go through the support for tax payments and deferrals. We're going to go through the business rate grants and all the different stuff that entails with that, who's eligible, who can get one, how are you going to get it, all that kind of stuff. We're going to go through job retention scheme, JRS, and also SSP and what changes have happened to that. Particularly since this is payroll week for a lot of businesses. We've got obviously Friday paydays this week and end of month paydays not on Tuesday. So this is going to be quite topical, and obviously the April payroll is going to be heavily affected by this. We've also got the CBILS, the Coronavirus Business Interruption Loan Scheme, how they work, what you need, what's available, all that kind of stuff. And then, like I said, we've got self-employed support as well. So yeah, I can see there's a few of you joining now. So obviously, like, there's a little Q&A. If you've got anything during it, feel free to ask your questions and we'll go through them. So we're going to start with the tax deferrals first. So this does depend on, obviously, the businesses having that particular tax registered and they have those normal obligations. For VAT returns, the February, March and April VAT returns are the ones that are going to fall into the deferral period at the moment. So Rishi Sunak last week said that anything that was due for VAT from the 20th of March 2020 up to the 30th of June 2020 will be deferred, and it's not going to be due until the end of the tax year. And so by the end of the tax year, that automatically means to us the 5th of April 2021, and that is when we assume those free VAT returns are going to be due. Now, the May and June VAT returns, although they fall into the period of 20th of March to the 30th of June, their payment dates do not. So at the moment, as far as guidance is aware, is showing, and from what we can see, those would still be due on their normal days. So they would still be due, the May return would still be due on the 7th of July, and the June return would still be due on the 7th of August. He has said that that would be extended if this period would be extended if it needed to. So, and he said that to a lot of the things we're going to talk about today. There's normally like a timing or a period attached to it, but he has said it will be extended. So if I know a few people might have already done their February VAT return nice and early. If they've already paid it before the 20th of March, you can't get a refund or anything like that. It's probably one of the times where you've paid it nice and early and it's just been paid, but it's done. It's really key that we've had a lot of conversations around this with a lot of our clients who've got these kind of VAT returns right now. And it's really key to know that this is still going to be due. It's not wiped. You're still going to have to pay it. And so if you've been provisioning for your VAT fine, like anyway, putting, you know, the VAT aside as it's been coming in the business and you've been having that provision, and you still want to go ahead and pay it, then by all means you can. If you have a direct debit with HMRC and you want to take up this deferral, you must cancel the direct debit with your bank. So you have to go into your online banking, either on your app or online, and cancel the direct debit with HMRC, and then just make sure you make the payment manually. You can still do that and then make the payment manually early. Like if you still want to meet the deadline and you decide you just want to cancel it just in case you may need it, then by all means. But the whole point of this is that HMRC would rather you spend that money or have that money to use on making sure your staff are paid, making sure that you can still pay your rent and stuff like that during this difficult time. And then they'll probably switch back and will want it by the 5th of April. But there's no penalties, no interest, no kind of repercussions for this. So you can take advantage of this if you want, but do please be aware, put this into your cash flow. If you're doing a forecast, it is going to be due. So you just got to figure out that if you do spend the money that you've set aside for it now, that you are going to have to find that again close to the time in April 21. PAYE, time to pay. So basically this can be done by your accountant or it can be done by yourself. Your accountant has to be registered as an agent with you for PAYE, of course, though, but it's relatively straightforward to do. There is a number to call. Let me just see if I've got that to hand. Yeah, there's an 0800 number, 0159 559, and basically that is the coronavirus helpline. It's a real quick way to get through, and you can defer any PAYE that is due, and usually by default to 3 months. You can also extend that and have it for longer if you want to have a chat with them, and basically you can come up with a payment plan, and that could even be then up to 12 months or so. The idea with HMRC, again, is that they'd rather you pay your employees and keep running, because in the long term, they'll get more tax and all that kind of stuff, and help you out in this period while a lot of people have had a loss of earnings and a lower trade at the moment. The PAYE does not apply automatically. So if you have to defer this, you have to go out and actually do this yourself, otherwise it is going to be due. And it needs to be late. So I think we found this out today, a member of the team found this out today, that basically can't be proactive and call them now and say, oh, hey, we've just done March's payroll, the payment's due in April 22nd, we want to defer it. That doesn't work. You need to wait until it's late. So call on the 22nd of April or on the 23rd of April and actually have that conversation then, and then they'll defer it. So kind of weird, because normally they always like you to be upfront and nice and early and tell them you're going to have problems and then spread it. But I guess for whatever reason, they'd rather it be late first and then you do it. But no penalties and interest. It's going to be frozen for now. Longer payment plans may have interest, but it's just something to bear in mind. It depends how long you're going for. But a lot of the short term, like 6 months to 12 months, is going to be interest free. Income tax for self-employed. So if you had a payment on account for your 2018-19 tax return that was due back in January 31st, 2020, you would have paid half of your first payment on account then, and you would have had your second payment of account due on the 31st of July. That has now been pushed back to January 2021. So it's going to be due with the rest of your tax anyway for the 2019-20 tax return. That's due January 2021. Again, if you have this on a direct debit, you can cancel it. A lot of people don't have these on direct debits and pay it manually, but you can still pay it early if you want. So if you've got the cash sitting there, I've had this conversation with a few clients already, and some people are just happy to get it paid because they've already got it and they don't need to keep it aside. So if you're like heavily organized and you haven't been impacted too much and you still want to just get it out of the way, then by all means. But again, that option is there, and this is applied automatically. So income tax and VAT is applied automatically. You do not need to do anything. They have just set the new deadlines and will automatically expect it at that new date. PAYE is the only one where you actually need to have that conversation. And the same with corporation tax. There's no particular thing or measure for corporation tax, but it does fall under the time to pay. So again, there is this kind of default defer to 3 months. And again, you can spread that out longer if you want, over 12 months. It doesn't have to be due at any point, like immediately, or if it's due in 6 months' time, you can still do that. But again, I need to double check this, but I'm pretty sure corporation tax probably will sit on the same thing, that it needs to be late to do so. But I would always just give them a call first, or ask your agent to jump in and give them a call and just see what's best. Because if it does work, normally with corporation tax, it does work best to call them in advance. They're very not helpful if you call them when you're late, but it might be just because of call volume, and HMRC have lowered their call hours. They've used to be open 8 till 8. I think now they're open 8 till 4. So there's yeah, that might be that they're just trying to reduce the call volume at the moment, because there's going to be a load of people that are really urgent in trying to get through to them. So that's all the tax deferrals. Like I said, any questions, feel free to pop it in the Q&A, and I can go through any questions and get back to you on those as well. What we've got here is then business rates and grants. So basically, I've tried to put information on here more so for people who want to read the slides or have access to the slides later. If I just put one word bullet points for me, it wouldn't be useful for you guys. So yeah, these can always be read later. But let me just check. We've got a question from Emily. So thanks so much for doing this. Really helpful, much appreciated. Can I just clarify that we still need to file a VAT return on time, even though we're not planning on paying it? Yeah, excellent question. So VAT returns still need to be filed by the normal deadline. So the 7th of April, 7th of May, 7th of June, you still need to prepare your VAT return. HMRC still need to know how much your VAT return is going to be. So you still need to prepare it. There is obviously some businesses that are going to be affected in terms of record keeping and stuff. I know at Cone we're going to be a little bit more lax in terms of if clients can't get us the information. Normally, like if we're missing receipts, we'll send our queries out. If our clients can't get us that information because the shop's closed, it's locked down, all that kind of stuff, we'll submit as is. As long as we've got the majority of the income declared, that's the most thing that HMRC is concerned about. And a lot of our clients anyway, the sales are easier to get than the missing receipts. So yeah, you don't have to. It's better to submit the VAT return with as much correct information as possible, and then you can always include anything you've missed in your future VAT returns. But yeah, still file a VAT return. The payment is automatically deferred, yeah, that's just really, really key. The good thing here is that if you are on a refund basis, like you tend to be in a refund, then yeah, that makes sense. Awesome. Yeah, if you tend to be in a refund position, refunds and rebates are still going to get paid out normally like they would. So if you're in a refund position for your May return or your April return or something like that, that is still going to get refunded to you like in the normal time frame, which is 2 to 4 weeks on HMRC's kind of advisory, but usually within a week of submission. So yeah, thanks for that question, Emily. Yeah. So business rates and grants, basically not all businesses are eligible for this. There are requirements here, but for the most part, if you're a small business and you're in a business premises and you are entitled to small business rate relief or rural rate relief, which is this SBRR and RRR. So small business rate relief and rural rates relief. Basically, this is where if the rateable value of the property is under 15K, you normally don't have to pay small business rates. Can vary council to council, but for the general most part, you'll know if you're an SBRR. That basically means you've got a property, you're in a premises, maybe it's an office, maybe it's a cafe, whatever it might be, and you do not pay business rates, you're exempt from them. That means you do have small business rates relief. Likewise, if you're more rural or stuff like that, you'll get rural rates relief. That means there's a one-off £10,000 grant available to you. No strings attached, no repayment needed. It is a grant. Our understanding is if it is taxable, potentially, like most grants are. However, that could be clarified, and it might just be 10K free, and there's no tax on that. But sometimes grants are deemed as taxable, but I would probably expect that they will update us on that. Because it's a government grant, it probably won't be taxable, but you never know with HMRC on that side of things. But because it's coming from the government, it doesn't make sense for them to come and take tax off of the grant they've given you. They would just lower it and give you 8 grand, right? So yeah, I would expect that 10 grand won't be taxable, but if they update us with that, then we'll let you know. Emily, how will they refund if they cancel DD? Yeah, so basically the DD, the direct debit, is not a two-way direct debit. If you are, the direct debit you set up with HMRC is just for them to collect. It's a variable direct debit, and it lets them just, when you submit your VAT return, they get notified, and then their direct debit details pulls through and updates the amount and collects it normally around the 10th of that following month rather than the 7th. The refund mechanism is submitted via your bank details, not via direct debit. And if you are in receipt of refunds, you or your accountant at one point would have filled in, probably on your VAT portal online, would have filled in the bank details for them to refund to. Otherwise, they send a check. There's no direct debit. It doesn't go back, if that makes sense. So the direct debit is just for them to take the money from you. It doesn't. They then pay out via a bank transfer or via check. So yeah, no, that's good to clarify there. So small business rates, the £10,000 doesn't matter in the industry. For the most part, everyone's going to be included in that as long as they have a premises and they're currently getting small business rates relief. Retail and hospitality grants are available. Now, if your rateable value is 15,000 or under, so you get small business rates relief, but you are retail and hospitality, you're still going to get the 10 grand. And that 10 grand isn't doubled up. From what we can see, it is still the same £10,000. So it's just the one grant. The £25,000 is available if you fall into the retail, hospitality, and leisure, and its rateable value is 15K and up to £51,000. So if you fall within that, then you'll get a 25 grand grant automatically. Again, same as the above, no strings attached, no repayments, nothing. So really, really nice and easy to do there. Let me just clear these. So the main thing here is checking, because the council, your local authority, will already have you down. If you're already paying rates, they will already have you down with what your industry sector is. You'll already be in the retail or the hospitality sector, and you can check your most recent business rates bill if that's the case, and be able to see, or maybe you've got a login. Again, all the councils are slightly different. Some have logins where they have the access on all the details. So there is no kind of way to change this or see what you are, but sorry, there's no way to change it, but you can see what you are. We're advised anyway from either your bill, and that's normally where you can find your rateable value as well. So if you're unsure about your rateable value and you just want to double check, it should say on your bill, because that's how they work it out. It's your rateable value times the penny amount, and it comes to the figure that you have to pay. Now, the local council will be in touch with how to claim. We've seen a bit further afield from us anyway. I don't think any of our clients are affected by this, but there's a Doncaster local council has set up their website for people to claim. So they have to create their account, put in their business rates reference, and they put their bank details in, and that's it, job done. They'll then process the grant and send that out via a bank. We imagine that is going to be the case for all the councils. They're just putting them all together, and the grants are expected to be paid out mid to end of April. You're not expected to jump through any hoops. It shouldn't really be anything that your accountant needs to complete for you. It doesn't, from the sounds of it, seem like you need to provide anything other than your bank details for them to pay. Because again, although you've got a direct debit set up, it can't go backwards. So you'd have to give your bank details for them to make that payment. Our understanding is it's going to be one lump sum, and that will be it. So that's what we understand from the council side of things at the moment. We have 2 shops, so we can claim a grant for each shop or just 1 grant for our business. We're a retail business with 2 shops and an online shop. Both shops have a rateable value of less than 15K. Cool. So the 2 shops, it is per premises. So that is £10,000 per premises, as long as each one is eligible. The rateable value is less than 15K. So you would fall under the retail and hospitality grant, and you would get 2 lots of 10,000. I think it's really key here because this is the potential issue, and it doesn't apply to retail, but there might be some industries that are affected by this, and it would potentially be if you were, say, an office or something like that, right? So if you have more than 1 property, you're normally not eligible for small business rate relief. I believe that is, we don't really deal with small business rate relief in terms of claiming. It's out of our remit. We don't need to do it. But from the clients that we have that have multiple locations, usually small business rates relief doesn't always apply if you have more than 1 property, or 1 property nudges you over. You're then not eligible for both. If you're not in that industry and you're not eligible for SBRR, but your rateable value is under 15, you wouldn't actually be eligible to any grant. But in your case, Emily, you've got 2 retail stores. The online store is that doesn't matter, doesn't have a physical place or premises. Your 2 shops, absolutely, from the current guidance that's available, you would get 2 lots of £10,000 for each business, for each premises. That can be that it's still 1 limited company, it's 1 sole trader, it's 2 companies, whatever. It's on the basis of per property, or hereditament, I think I'm saying that right, hereditament. Basically, the only things that aren't really included, which I don't think is going to apply for many, car parks and things like that, where they're kind of different. But yeah, it's going to really help, and it's going to be a really good cash flow boost. And the only thing they say to this is that it's to help ongoing business costs. That's all. So it doesn't have to be used for anything in particular. It doesn't have to be used for you're basically free to use it for what you want in your business costs on that side of things, and help you pay the rent and stuff like that over the next few months while trade might be a little bit lower than normal. If you are a retail, hospitality, leisure, or nursery business, then you'll find that your 2020-21, it's going to be really annoying to start saying, that entire tax year of business rates is free. There's not going to be any business rates for you during that time, for that year. And that is understood to be free as well. It's just going to be that there's nothing there. And then they'll start back up again in 21-22. At the moment, it doesn't seem like it's going to be something you have to repay or pay eventually. You're just going to get the year for free. Again, if you don't fall in these industries, then that's not going to apply. You're going to get a bill like normal, but it's just for these ones. And it's pretty broad. I mean, we're finding that a lot of like hair salons and stuff like that are coming under retail. Spas and hotels and stuff come under hospitality, as well as cafes and restaurants. Cinemas and bowling alleys and stuff is leisure. Nurseries, obviously, nurseries. And so it does cover quite a wide amount of businesses. I think the main things that are affected here are the ones that don't necessarily have to have physical storefronts. Insurance, banks, accountants, lawyers, those kind of things aren't going to be encountered in these side of things. So you might find that if you're in a particular service industry, then this is where this isn't hitting you as much when it comes to that benefit. You've got a question from Agatha quickly. So we had premises which we moved out of at the beginning of March. We now run a business from home, which means we won't be eligible for any grants. Do you know if the government is looking to support people in a situation like ours? Yeah, so there is no idea at the moment what the cutoff is. It might still be, because there's also a clamour now for some people to try and get cheap offices so that they can try and get in time to get a grant. Whether that's going to work or not, we don't know at what point the council are going to pull up their records and say, right, we need to look at this. And likewise, if you've had to move out of your premises at the beginning of March because of the coronavirus and that kind of stuff, then it was related to that, You may even still find that you're eligible for this. I'm not too sure on that at the moment. However, in terms of other support for people who work from home, there's not so much for that in terms of grants and stuff at the moment. I will be covering a little bit of that in a little bit. But basically, like Cone, we all work from home. We don't have an office. There's no grant for Cone or anything like that. And I know a lot of our other clients are affected by that as well, because we just don't have premises. But we also don't have rent. We don't have business rates. We don't have that stuff normally anyway. So it is there to help run the business costs on that side of things. So hopefully that answers it a little bit. There's not a lot of support at the moment, but we are hoping for some announcements later today from Rishi Sunak, the Chancellor, who's going to be going through some self-employed stuff and options for those people there. And I'll be talking about what's proposed or kind of loosely proposed at the moment as well. And I've touched already on the bottom bit. Likewise, work from home, no premises equals no grants. Right, let's go to that one. Cool. So the next one we've got is the JRS, the Job Retention Scheme, SSP. This will probably be the longest bit, because not only has this been the majority of my client calls and going through what's eligible, what can you do, this is the most confused area of it. It's also the least amount of guidance available on it. So yeah, feel free to ask any questions as we go. So let's get SSP out of the way, because that's nice and easy. SSP for coronavirus related incidents. So if you were sick, if you were self-isolating because you thought you had symptoms, it doesn't count if you was just self-isolating because you fancied 14 days off and just worried like you were going to get it. But this is very hard to police. It's very open to abuse. I imagine most people are going to just say that they are ill because of coronavirus, because if you are ill, you do not need a doctor's note. It starts from day 1 instead of day 4. You still get the same amount. There's no difference on the amount. It's still £94 a week. And it lasts up to, well, you can be sick for longer, obviously, but the government are paying up to 2 weeks. And basically the SSP is paid by the employer, and then the employer claims the SSP back. At the moment, there is no mechanism to get that reimbursed yet, but we're expecting that to be end of April, May time, where there'll be, again, maybe through the same portal that I'm going to talk about with the Job Retention Scheme, but there may be something there where you can get that refunded, or it will be a separate thing entirely, either a form or an online process of some sort. The key thing here is to really keep your employee records really, really detailed. When were they sick? Why were they sick? When did that start? What date did they come back? Did they go off again ill? Like, count that as a separate one. The details are really clear on this, because it's probably going to be 2 or 3 months later that you're going to need to pull those details up to make the claim. So you don't want to have forgotten all the key details and dates. And if you've got someone running your payroll, then just make sure you're keeping them up to date, whether that's your accountant or you've got admin or payroll person to come in and help you. Just make sure they're kept on the same wavelength so that they can make sure everything's being applied correctly. Because with a lot of the payroll software have updated it now, so that if it is a coronavirus related incident, you can tick it to get rid of that one day, so it starts on day 1 rather than day 4. So hopefully that makes sense on the SSP side of things. Just to be absolutely clear, if they're sick because of just a normal cough or broke their leg or whatever it might be, had a bad fever or whatever, but it wasn't coronavirus, then normal SSP applies. So it starts day 4, still £94 a week, but the employer does not get reimbursed for that. It is only for coronavirus related instances. So hopefully that makes sense. Now, the Job Retention Scheme basically came in last week, essentially, and it's kind of trying to combat the people who are getting laid off for, cafes, restaurants, shops closing. They've now got workforce that had shifts and had expected work, maybe on salaries or maybe hourly, and they are now, you don't need that person in because there's no work to do. So you naturally lay them off. And the problem with that is that leaves a ton of unemployed people. Now, furloughed workers, I've never used the word furloughed before until recently with all of this. Furloughed is more of an American term. It's basically equivalent of an English sabbatical in a way. Basically, if you're furloughed, it means that you're still employed, you've still got a job, but your company doesn't have work for you and you're not getting paid. But you've still got a job to come back to when they do have the work to give you. So normally it's a kind of equivalent of unpaid leave over here in the UK. But what the government is doing is they are saying that if you designate someone as furloughed, then they will get 80% of their cost paid by the government and it will be covered. Now, there's going to be a portal around mid-April that is going to be released where in an ideal world, it will all be nice and simple, and we then upload the details of the employees who have been furloughed for each business, how much they are meant to be getting paid each month, and HMRC then process that and refund the business with the grant. Now that grant, again, it's not repayable, it's given to you. Employers aren't making any money from this, basically. The money is paid from HMRC, and then that money is then paid to the employee. There shouldn't be any pennies left over or anything like that. There's no commission or kickback or anything like that. So basically 80% of the wages are covered. You can choose to pay the extra 20%. We do have some people who are choosing to do that extra 20%, and that's perfectly fine if they want to do that. So you would still have 100% on the payslip, and then there would be a 20% deduction if you're not paying it. They would then have their tax and NI deducted like normal and their pension deducted like normal, and they will then be left with their net pay. That net pay is then should be paid by the business ideally if it can afford to do so, and then that claim is put through and the business is then reimbursed by HMRC. There's going to be some instances where some businesses are really hit hard with this and they can't afford to pay the 80% net pay first and wait for a reimbursement. It's really tricky and it's intertwined with employment law here, because legally, in most contracts, it is a breach of contract for the employer to not pay the employee by the designated deadline day of whatever the payment reference is. So most people, that's going to be last working day, last Friday of the month, whatever it might be. If you've got that in your contract, you need to try and maintain that, or you're in breach of contract. And this is something where, especially for home clients, we've set up a HR helpline where you're more than welcome to call. We send that out on a mailer. So if you need a reminder of that, then just feel free to email me. But it's definitely something to check with a HR professional. If you have employment contracts and you just need them checked or looked over. The main thing here is that you have that communication. So a lot of employees are going to understand that you're going to be in this position, and like I said, we're expecting for April payroll, we're expecting that you'd get your payout from HMRC by the 7th of May. So about a week later. So in some businesses' case, it may be just that you're not going to be able to pay it. You're just going to have to let them know up front, ideally, as much in advance as possible, and let them know that as soon as you get it in from HMRC, you will then pass that over to them. Everyone's going to kind of be in this boat because there's a lot of uncertainty with it and the portal's not even ready yet. So hopefully this will get a bit more concrete the closer we get to it over the next coming weeks. But the main thing here is communication and being nice and clear. With furloughment, you have to, the employer is in control. The employee can't choose to be furloughed. They have to be designated by the employer. The employer has to give that offer to the worker, and the worker needs to agree. The employee needs to agree to it. If they don't agree to it, and we're not seeing that, we're not expecting that to happen. We're not expecting that to happen much, because essentially if you're furloughed, you have your job secured, you get 80% of your pay, albeit maybe a little bit late, depending on the circumstances. You might even get the whole 100% of your pay paid in some employers. And you don't have to do any work at all. No work at all. You can Netflix, you can chill with your family, you can do whatever. You do not need to work. You're not allowed to work while furloughed. One of the questions we get is, can you bring an employee out of furloughment? The answer is yes. at any time. I'm not sure if you need to give them notice, that you can't just ring them up and say, hey, be in an hour, be online in an hour. I think you have to follow normal thing and give them normal protocols and kind of give them notice, whether that's a week or not. Again, guidance is really hazy on this, but it's usually, if you've got notice periods and you've got kind of general kind of stuff in your company handbooks or your contracts, try and follow along those lines, because they will be deemed as fair. Then it will be, if you normally give people a week's notice for holiday and stuff like that, then try and operate in a similar manner, because that will ensure that you're still applying it fairly. And again, to each other on your workforce as well. Try and make sure that you're applying it fairly across your employees. On that side of things, there is the potential of unfair dismissal claims or unfair kind of claims that can come up from following certain workers over others. But it's looking at who's your essentials, having the reasoning behind why you're doing so. Following your mate because it's going to help them out a bit isn't ethical or recommended, when it would make more sense to follow someone else who generally isn't needed right now more so than the others. So it's a little bit of common sense there and stuff like that. We've got a few questions. So one from Ellie. So JRS, will there be PAYE on top of the 80%? So yeah, so basically we would put in 100% of the earnings like normal. So whatever the average earnings are. So if they're salaried, really easy. If they're hourly, then we're recommending you either take February's average earnings or you take the last 6 months average earnings, depending on the circumstance, but you apply that equally across your workforce. So if February was a bit of a weird month, then probably recommend looking over the last 6 months, taking an average. And those hours go in at the normal hourly rate on the pay slip at the top. You would then deduct the 20% if you're not paying it. That would get deducted as a furlough deduction. You'd be left with like the balance, 80%. Then national insurance and PAYE are deducted off of that. The employee isn't getting 80% of the gross, they're getting 80% basically after tax. The £2,500 limit, because that's what it's capped at in terms of how much you can go. So someone on a 50 grand salary is going to be capped at 2,500, but their actual money on their pay slip is going to be about 2 grand. The reason being is that the employer's contribution to the pension and the employer's national insurance, which is 13.8% on top of any salary after the thresholds and things like that, is also included in that 2,500. The 2,500 is the employer's cost, not the employee's wage. So on top of the employee's wage, there are the pension costs and the employer's national insurance that need to be paid. And so that makes up that figure. So for most people, the cutoff seems to be around 31, 32K. That if you earn that on average across your year, you will be at that cusp of that 2,500, which means you'll be getting about 2 grand in that, and the rest will be made up of, you'll be getting under 2 grand in net, and the rest will be made up of national insurance, tax, PAYE, and the pension contributions as well. But the employer would get paid 2,500, and that includes covering your net pay. Let me just double check. People work voluntarily that are on JRS. No, the person who is on the job retention scheme, who have been furloughed, cannot work at all. Not allowed to work whatsoever voluntarily or anything like that. That said, they can work for someone else. So if they have, our current understanding is that if they have 2 part-time jobs, they can be furloughed from both jobs. They can also be furloughed from one, but not from the other. And they can still work the other job and get furloughed from this job. They have to be separate PAYE schemes. So if you're operating in multiple locations or multiple businesses, then it depends on your PAYE scheme structure. But our understanding is that if they're furloughed from one job, their average earnings are covered and they could still work elsewhere, and that would be fine and still earn, and they're still getting their earnings covered here as well. There's kind of a gap with people joining. Anyone who kind of switched jobs in March and they left their current job or they handed in their current notice, and they are joining a new job and they've had that revoked, or that job's no longer available, or the business is closed, there's not a lot for them. The furloughment, they have to currently be employed as of the 28th of February. They had to have been on the February payroll to be included and furloughed for March moving forward. This is an anti-abuse to stop everyone adding their family members. So unfortunately, it's a measure that's been put in place to stop this, but it's going to leave a lot of people in limbo who potentially had jobs lined up and they've had that revoked by their new employer. Is then the best recommended solution is that they go back to the old employer, see if they can get their notice period revoked so that they're still employed, and then their employer puts them on furloughment. And then when it's all said and done, if that offer is still available, they go job hunting afterwards, they hand in their notice again and they leave at that point. That's what's recommended. But having your notice revoked is at that employer's discretion. They don't have to accept it. They can still let that go. But that's probably the one pitfall. People who are moving in March and they've had that job offer revoked. Likewise, if they've joined the company already and they're not, and that's all good, but you need to follow them, you can't. They would have to be the person that you have on unpaid leave. They can still be employed, but they're just unpaid, or you'd lay them off on that side of things as well. What if I need someone to work for continuity, but not usual hours, can be given, e.g. 3 days down to 1 day? Yeah, absolutely. So you can reduce hours, you can prorata people, you can put the hours down. Doesn't affect furloughment at all. Furloughment is only if you are laying them off and you're giving them 100% of their work off, and they will then get 80% or up to 100% paid for in that instance. They can't work for you. They can't do any work for you on that side of things. The second they start doing some admin, they've come back, they've breached it. Yeah, basically it's as if you sacked them, but they're there for you to come back and bring them back whenever you're ready. Currently, furloughment runs till the end of May, 31st of May 2020. But again, this is one of the other things where Rishi Sunak said that it would be extended if needs be. So if this goes on for a while, then this would be extended past the 31st of May 2020. It's under the assumption that 1st of June 2020, everyone who was furloughed will be back at work or back onto their rotas. So there may be, because obviously there's going to be a loss of trade and it's not going to be straight back up again necessarily for everyone. There's going to be that gradual process again. You might then need to still have some people who are on unpaid leave and slowly bring people back from furloughment as you need them, but they're going to be unpaid during that time. Or you need to make that difficult choice of, right, do we lay them off? Do we check the contract? Do we make them redundant on that side of things? And like I said, some people, depending on how long they've been with them, redundancy pay only applies for certain terms of service and all that kind of stuff. So it's definitely, anything like that, it's definitely worth getting HR advice for and double checking that you're applying the right lines and guidelines there. So hopefully that helps, Ellie. Emily, if you have no formal contract with staff, what are the common law type requirements? Our staff have been with us, by the way, 3 to 10 years. So contracts most of the time mean very little when it comes to the common law. Employees who have been with you for more than 2 years, incredibly difficult to dismiss just for normal reasons. Obviously, you can never dismiss anyone for discriminatory reasons, racism, homophobia, anything like that. Like by you doing that, obviously, if they've been doing discrimination, then yeah, don't get rid. But you can't discriminate that employee regardless, right? If they've been with you under 2 years, then you can make them redundant. You can let them go, although there is different ways and methods of doing that, processes you need to follow, potential disciplinaries and things like that. In this instance, for most of the time, most people are going to be laid off, or they're going to be told they just don't have the job anymore. They're going to be made redundant. That tends to be the case. For people who've been with you for more than 2 years, redundancy starts to kick in at a sliding scale. They're entitled to more depending on how long they've been with you. Someone who's been with you for 10 years is going to get a lot more than someone who's been with you for 2 years. There is no real kind of support at the moment for paying redundancy because that does become due if you make someone redundant. So that's the main thing right now, which is why furloughment is kind of recommended in the interim. because you can follow those workers. And the main thing is checking with HR, like checking with a HR professional again on this, because most of the time in contracts, there's going to be what we call a force majeure or something similar, where it will say, in the event of something drastic, like we retain the right to change your hours or to change your pay or to cancel your contract entirely, like unforeseen circumstances, right? Some contracts don't have that in, but what we recommend is that you have the discussion with the workers, because like I was saying before, you have to agree furloughment with the workers. You can't just tell them, right, you're furloughed, bye. You have to say, right, this is what I plan to do from this date. It will run until the end of May. We have the right to extend it. And basically, that will give you, as long as they agree to that and you get some sort of signature there or some verbal agreement, preferably written agreement, that can be signed by like DocuSign or something like that. That would be preferable to cover you and just help show that you followed that process, that, you know, there's been no discrimination, there's no stuff like that. It's more having communication, because again, I think ultimately, if you leave your team not knowing where they're going to be, where they stand, have they got security, have they, you know, are they going to be looked after, they're going to be like unsure, you're going to lose that trust. You need to be as open and as verbal with them as possible with what's happening, and they're going to understand as well. You know, they're going to understand. Like I said, some are going to love this. Some are going to love the idea of having their job secure, 80% paid, and they get to chill. You know, others, you get to spend time with the family, kids are off school as well. Like, it's going to be great. Other people are going to be really wanting to still help your business, put in a shift, like really help you during this time. But ultimately, it's looking at who your key workers are. Who are the people that, as you start to shrink your workforce down, who are the key people that you still need working for you to keep you operational? Furloughment is an all or nothing. Like we were saying with Ellie's query earlier, reducing hours does not count to furloughment. So it means the employees get less pay, and it means that you don't have to pay as much, obviously, but you get less output in terms of hours. This means that 20%, if you reduce their hours to say half, like part-time, 50%, they would more financially be better off being furloughed. But if you still need people doing the work, it's not about that. It's about keeping that. But having that conversation with the worker and having that transparency is really key. Contracts, I would definitely recommend after this that you look at having formal contracts. You can use something like Law Depot, or you can use something, this isn't affiliated or anything like that, or you can use something like Sparker. Both have templates, both are very similar, to be fair. Sparker's a little bit more modern, but basically they all have like employment contracts. You can then tweak them, tailor them, buy them one-offs. It's definitely worthwhile, because not only does it give you security as an employer, but it gives your employee that security as well. Everyone knows on the same page what happens if they're not happy, if you're not happy, what happens and what the process is. So I definitely recommend checking that out afterwards. I know it's hindsight, but definitely worth checking that out. Particular HR things, I would definitely check with a HR consultant though, because I'm not trained in HR in the slightest. So yeah, hopefully that helps a bit. We're gonna have another question. With email staff, after talking to them to say and explain they are furloughed, do we need to have a response by email from them to say they accept? I would strongly recommend that. Every guidance I've seen so far says that you need to ensure that they have read it and they accept it. So just sending them an email is not enough. You have to get that agreement from them. As I said, if they do not agree to it, then the option is to either keep them as they are, restrict their hours, which if you've got it in your contract to be able to do that, then you are fine to do that, providing you follow the normal protocols, or you make them redundant. That's the only other option if you're literally back against the wall and they won't accept it. We're not finding many people are turning this down, as I've said before, but you definitely do want to make sure you've got it covered in case you get any wrongful dismissal claims or any employment tribunals. Your employer's liability insurance is not going to look after you if you haven't followed the normal process and made sure things were looked after. One member of our staff works 5 days a week for us and is now on furlough. Can they now get a job at a supermarket and work 5 days for them and still get and claim their 80% from us? Yes, as far as we're aware, it's per PAYE scheme. So they can get furloughed from one job and then get another job and work 5 days a week somewhere else, and they will get paid for both jobs. They will get taxed on both jobs, like and they'll get taxed 20% on both jobs and stuff like that. Like, there's not going to be allowances because it's going to be shared between the two, because they're still technically employed. It's like they were getting a second job anyway. The main reason behind this is, like you said, with a job at a supermarket, there's a huge demand for delivery drivers and things like that, and people who are key workers right now. So yes, I think they've put that in so that it doesn't deter people from just sitting at home when they feel like they could help elsewhere, and maybe earn a little bit extra money as well. If I reduce down now 3 to 1, then they will still calculation at average. All right, so if you reduce them down from 3 days to 1 day, will they still be calculated? The average earnings are based off of February. So so if you furloughed them, if you reduce them down to 1 day a week and then you furloughed them, it would still be based on the average earnings that they were on before, back in February, or your 6 months from September to February. Again, to minimize the option of people reducing your hours, then furloughing you, so then you only get 80% of the lower amount. It's based off of February, so that no one can tweak it or go back and change it or anything like that. Because again, this is partly with the self-employed aspect as well. The government are really struggling to put measures out to help people, but there's always going to be that 5% that are going to abuse it. They're going to try and rinse anything they can possibly, put their family members on, start doing shady HR practices and stuff like that. So they're trying to make sure that it's accessible, but allowable for everyone as well. So if you reduce them down to 1 day temporarily, and then you decide to furlough them, they'd go back up to their normal, like 3 days a week, whatever they were doing before, and get paid the 80% of that moving forward. So hopefully that helps. I think we've answered that one. That's fine. Sweet. Would you recommend anyone for HR advice? So there's a couple of different things. So if you're looking for templates and documents, Law Depot, Sparker, those kind of things, we do work with a HR consultant, kind of ad hoc for anything that we need and stuff like that. So really happy to share her details and stuff. If you want, feel free to drop me a message on Instagram or something, and I can post that out to you. That's not a problem. But I'd recommend just having a, even if you're using some of the HR tools and stuff, like we use Charlie HR, for instance. They have like a HR side of things as well, and all those kind of things are really useful there. Just be able to have a look, whether it's looking over templates, whether it's creating things bespoke, whether it's just having a chat with someone. Sometimes that's just really useful. But yeah, feel free to message me and I'll send you some details over. That's not a problem. Question from Hal: will the JLR apply to a director's PAYE salary if it's the tax threshold? And I presume dividends would come under the self-employment procedures they will talk about this afternoon. Cool. So basically, it kind of creates a paradox, because a director can furlough themselves, and in some instances that is legit, but they have to down tools completely. They can't do any work. They can't do any emails. They can't sign VAT returns. They can't do accounts or sign off any accounts. They can't work at all. Again, you have to have been on payroll from February. So if you're, I know how, in your instance, you're a new company, new payroll. So I'm not sure that would be backdatable, because it's going to start in March, which is the thing here. The main thing here is that a lot of company directors and self-employed are just left out of this entire loop, because we're hoping this afternoon there is going to be like support directly for the directors who've had to close their business or they can't work temporarily. To talk very quickly about that, it's going to be on parity with this 80%. It's going to be up to £3,000 approximately, 80% of that over the last 3 years of earnings. I don't know where that leaves people who are brand new to running their business, and they were employed before. They don't have the last 3 years of self-employed earnings, so I don't know about that right now. But yeah, very grey area, and it's been basically single directors have been left out of this entirely in terms of the planning, We do have one client who's basically shut down. There are two directors. One director's just going to not do anything, and that's fine. They could technically, in that case, be furloughed temporarily, and the director needs to agree to that in writing. And the other director is the person who's doing all the day-to-day general stuff. So it can happen. The reason it can't really happen on your own is because when you're furloughed, you need someone to unfurlough you to bring you out of that. And so it creates a paradox where you can't technically bring yourself out of furloughment, from what we understand. So it is technically possible, but this is key. Strictly no work can be undertaken. The very last point of this, 80% of wages are covered, but if you pay someone minimum wage and that 20% is deducted off of them and it brings them under national minimum wage, you need to top up to legally stay under it. Even though they're not working, even though that they're not working hours, they are still entitled to national minimum wage. A lot of our clients are paying like more than minimum wage anyway, so it's not going to apply. But if you are on the borderline of paying someone minimum wage and it falls under that, then it needs to be topped up. Normal rules apply though. Apprentices can be furloughed. Apprenticeships that are on national minimum wage still have to be abided by, all that kind of stuff as well. But hopefully that helps with this a little bit. I appreciate there's a ton of questions and there's a ton of stuff, but yeah, if there's any more questions, feel free to put them through. More than happy to go through anything like that. And yeah, hopefully that helps a bit on that. Moving on to CBILS, Coronavirus Business Interruption Loan Scheme. So there's over 40 accredited providers so far. You really need to sit down and go through a cash flow forecast or have a look at your outgoings over the next 12 weeks on our Coronavirus Help Center. And we've also got a link on our Instagram and our LinkedIn bio thing. We have a cash flow forecast sheet, a Google sheet, which you can access and you can feel free to start using. Not only are you going to need it for the Coronavirus Business Interruption Loan Scheme when you're going to apply for it, because they're going to want to know, and they're probably going to want longer than that as well. We've done a forecast for the next 12 weeks, but they're probably going to want a year forecast, a 2-year forecast, how the loan is going to help you to keep your sales going, keep you open, that kind of stuff. But one of the main things is looking at, do you really need it? Because you're going to put yourself into debt with this. And for some businesses, that's just going to have to be what happens. You're going to need to do that. The government are recommending on the back of the job retention scheme that if you can't pay this 80% and your employees, and it puts you in breach of, you then need to still pay your employees by the deadline, by the payday, that you should be looking at a CBILS loan to kind of plug that gap and make sure you can meet your obligations as an employer. Not that useful, especially since the banks have already been shown to be trying to sneak in personal guarantees. I believe Barclays and HSBC have been caught with trying to do that already. So that technically, even if your business fails during this time, you will be left with that loan afterwards. It is very common for personal guarantees to be put in on business loans, because companies with limited guarantees, limited liability, if you close the company, the loan is lost, and that would be open to fraud for a load of people just to open companies, get a loan, close it, walk away with the money, no questions asked. That's why that's in there. A personal guarantee is usually in there to protect that. But the thing with the type of loans, that they're backed 80% by the government. That means that if your business does fail and you struggle to pay, you only owe 20% of whatever's remaining of the total loan that you took, and 80% will be paid by the government. So the lender has no risk. Well, they have 20% risk, basically. So it's really shady that some of the banks are actually putting personal guarantees on those loans as well, so that they will want as more of the 20% from you, and then will still get whatever they can't recoup from the government. They are being told off for that, but I don't know if that's going to do anything. And banks have different levels of policy. So some will say that they won't do that for loans under 50K. Some will say that, I think Lloyd said they would only do it for loans over 100K. So there is going to be some things. It's just looking at, if you've got no company loan at the moment, worst case scenario, the company closes, you've got no debt on yourself personally from that, you can walk away. If you get a loan and it has a personal guarantee on it, or you've secured it against your house and the business closes, you could end up having yourself personally affected by going bankrupt, losing your house, still having a payment to pay for a loan that you don't have anymore technically, and you're not benefiting or making more money from it. So it's something just general financial kind of, I'm not here to give you financial advice or anything. Obviously, I'm not a financial advisor, but it's just generally looking at the full picture and seeing if it's worth it. However, most banks are only talking to their existing customers. So all the major banks, NatWest, Lloyds, Barclays, Metro, all of them, Santander, all offering this. The main bank, the main people they're accepting are people who bank with them directly. There are other providers as well who are like not banks, they're just general lenders. So if you don't bank with any of them, you bank with Starling or Tide or Coconut or whoever it may be, you're going to be looking at probably going for one of them instead, because the ones who are directly with the banks, they're already inundated with swamps and calls. So you just want to just double check that, you know, you're not getting tied into anything that you don't agree with. First 12 months is interest free. Most loans are starting from 25k. This isn't really for smaller 5k loans or short term kind of 8 grand loans or whatever it might be. But in theory, whether this works in practice, but in theory, you could get a 25k loan for 12 months. It would be interest free. It wouldn't cost you any fees or anything like that. And you would then, you would then basically have that free funding facility with no actual interest. You can obviously go up to 6 years, I believe, for most things, and the loans can go up to 5 million. But obviously that's subject to like lending and criteria. So a lot of the businesses, because this is open to big businesses as well, not just for small businesses. So just something to be aware of there. Please prepare for long wait times, and they're going to want information. They're not just going to be like, yeah, how much do you want, where and when. They're going to want your latest financial set of accounts. They're going to want management reports potentially. They're going to want cash flow forecasts, again, 1 year, 2 years, 3 years perhaps. Business plan on how your business runs, what your potential. It's a lot of work to get it, but it might be something that is worth you putting in that effort to get it if it saves your business and it's something you vitally need. Bank statements, personal guarantees in some instances like we spoke about. So again, there is a list of accredited, I don't know if my thing's working, but yeah, accredited lenders basically. There's about 40 of them at the moment. Feel free to check them out, but they are going to want a lot of this stuff. Again, kind of leaves the new businesses that have set up in the last month or two kind of nowhere to go, because you're not going to have any of this. You might have some bank statements, but that's it. Some banks like Lloyds are going to want 6 months personal bank statements as well and stuff like that. So they all have different requirements. It may be in some cases easier to use a broker who can help you with that, and they take their fee from the lender, not yourself, if it's this type of loan. The key thing here is that this is a scheme that if you are eligible to a loan, so say you approach Barclays and you're going for a 50 grand loan, and if Barclays look at you and look at your accounts and forecasts and they say, we would lend to you normally anyway, they have to lend to you normally. It means that you don't get the 12-month interest free, and it's not backed by the government for 80%. So it isn't actually a CBILS loan at all. It's a normal loan. Obviously, you're probably gonna, if you're in that position, you're probably gonna take what you can get anyway, but just be aware of that, be aware of the terms that they end up settling on, because they have to lend to you normally if they would normally anyway. So I don't know if you can then ask for more so that it means they wouldn't normally lend to you, so it falls under that. I don't know if that's even an option, but yeah, this is available for everyone, but only falls under the scheme if they wouldn't normally lend to you. So if they deem you creditworthy enough to get the loan normally, then you would get the loan and the support that you need anyway, but it wouldn't be 12 months interest free, and it wouldn't be backed 80% by the government. So just to make that clear. Question from Emily. My husband and I are company directors. We're both on payroll via PAYE and we have a limited company. Can one of us be furloughed so we can still get our salary? One of us will need to work to keep the online shop running if we get orders. PAYE is a small amount of our monthly income from our business, as we take a monthly repayment on director's loan, mileage expense to make up our full salary. That means to cover our household bills. So technically, yes, one of you could follow the other. and it would be based on the salary that was back in February and January and stuff like that. So probably tax efficient salary that you probably got set up. There is a misconception on, is a company director self-employed? We are, normally the guidance from HMRC has always been that a company director is self-employed. So when you're filling out a finance application, rental kind of tenancy check reference and all that kind of stuff, and it says, what are you? Are you employed? Are you self-employed? You are self-employed as a director of a company, and HMRC deem you self-employed as well. Now, whether Rishi Sunak deems company directors as self-employed, we're going to find out today. But as you can see so far, there is very little for company directors. Whether you're in a team or whether you're solo, there is very little support for company directors, especially if you're in an industry where your industry's been hit and you now have no income coming through, so you can't pay your director's salary, you can't pay your normal dividends. That is going to be the issue. And potentially with the going back the last 3 years, for which is what's expected, going back the last 3 years, we'll move on to the next bit because this is basically self-employed support. They're expected to go back 3 tax years on your last 3 tax returns and take your average earnings. Now, the vast majority of people we work with, they're tax efficient. Dividends at 7.5%, capping at 50K normally, so that they've got 37.5K of dividends, 12.5K salary if applicable, and they've earned 50K and they've paid about 2.5 grand of tax. It's like a 6% effective tax rate. It's perfect. And this is where it bites people back, is that in these times, you've been tax efficient previously, and now it's not going to work, because if someone was paying 50 grand as a salary, they pay around 8K or 9K maybe in PAYE national insurance. So there's that 7 grand disparity there. We also don't know if dividends are going to be included as earnings, because the downside to that, by allowing that, is that all the investors who invest in all these companies in the UK also are going to get a cut of that relief. And I know they've kind of touched on that this isn't for investors, this isn't for the big wigs and the greedy investors. It's for the self-employed business owners that need this. And allowing dividends kind of opens up a lot more, again, abuse, accessibility to people who are probably already better off or well off already. So it's not that there are some people who aren't going to suffer through this. I think everyone's going to have a ripple effect through it, but this is what's taken so long for them to get right and put out there. But again, it was expected that it's going to be up to £3,000, looking at your average earnings over the last 3 years, and that will be £3,000, up to £3,000 a month that you would get paid. But you cannot be working. So if you have an online store, if you're still doing deliveries, if you're still working, you do not get any support from what we've understood so far, based on basically there's a draft bill that is subject to change and is what's probably being announced today. And that clearly said on there that they would only be entitled to that if they can't work, which does put a spanner in the works for a lot of things, a lot of people on that side of things, where they still operate online, but it's at lower value. It's going to make people have some decisions on whether they close and claim more money through the government, whether they keep going because there's potential to earn more online. It depends what's available, who's entitled, all that kind of stuff. What we do know is that there's universal credit available, which, if you already know about universal credit, basically if one of your family earns too much already, if your partner or whoever earns more, or they're furloughed and they're getting earnings still, you're not eligible for universal credit. Likewise, if you have more than £16,000 worth of savings, you're not eligible for universal credit. So it does put it down a bit. There is some housing benefit within the universal credit that has been increased a bit, but again, it's not an area that we specialize in too much. But it may be an option if you fall into the universal credit. You may be able to benefit a bit if you rent privately. But again, a lot of places have to accept, like landlords have to accept, that they'll get housing support payments and normally that's written into contracts. You'll sometimes see on letting things no rental support, no all that kind of stuff. So yeah, whether you can even use that is another question. If you're self-employed and you're ill, and this is for self-employed, not for directors of a company, this bit, the difference is here, directors can put themselves through SSP and get the £94 a week, just like, and can be for coronavirus, can be for 14 days, all that kind of stuff. Directors can claim SSP. If you're self-employed, you don't normally have a payroll scheme. You're not going to be on the payroll scheme yourself. It's very rare for that to be the case. So you would normally be eligible for employment support allowance. And what they've done is they've opened this up, and now it's equivalent to SSP. So again, self-employed, if you're a sole trader or a partnership, you can then potentially get £94 a week as SSP. Universal credit, providing your household is entitled to it, is about £500 a month. It's either or, because you go from one to another. So it's I don't believe you can claim both at the same time, or this is only if you're ill, this one anyway. So you might be able to if you're ill anyway, but universal credit is hard to get because you have to really have no earnings or very low earnings to be able to qualify for it. The requirement for universal credit as well is that you need to declare your monthly earnings and costs every month. So your record keeping needs to be impeccable, especially during this time, because you need to declare to them, and the second you start earning too much, you're then not eligible for universal credit. Obviously, we spoke about deferring the July 2020 payment on account to January 2021, but that's about it. There is currently not much else for self-employed people or company directors at the moment. That is what hopefully today's like announcements are going to be all centered about, with all the options available. But I would brace yourself for the fact that if you're still working, then you're going to be entitled to very little. But we'll see what's there and what's available. Again, how they do it for people who are new to self-employment or who've just set up limited companies, what support are they going to get? We don't know yet on that side of things. We've had people that have left jobs in January, February, set up their companies, and technically with hindsight, it would have been better doing that in April and getting furloughed in March if they were still employed with that employer. So there's a load of things where this is why they put caps on it, to stop people retroactively going back and changing payrolls, to putting family members on your March payroll and all that kind of stuff to squeeze in allowances. They've tried to tighten it as much as possible, and that's why the self-employed one's taken more time, because you can bet they are doing that as much as possible with this as well, because it does open it to abuse, and it is something where we want to make sure that we're not abusing it, because this is costing the government a ton of money in the economy, whether or not this leads to a recession or not. And this is something that we will be paying for in the future, with tax allowances probably not rising as much as they have been doing over the last few years. You know, things like NI, employer's allowance, and even SSP rates and stuff like that, maternity pay, those things are going to get potentially lowered or kept the same to try and recover from this when we're on the other side. So the more people that are taking the support that they actually need, the better. The less people who are abusing it, the better as well, because it means that it's being used properly and the people are getting the help that they need. So I skipped a slide there. Is there any more questions? We are at the end of, this was quite a long one in the end, an hour and 15 minutes. I have about 10 more minutes before I've got to jump on another call with a client. So if there is any more questions that people have at the moment, feel free to pop them in the box now and I will go through them. Hopefully I've answered stuff as we go and that's all good. But if anyone's got any questions, by all means, pop them in the box and we can go there and go through them. And where can you find us? So at Ben Nacker or at Cone Accounting on Twitter and Instagram. Website, we are cone.com. We've got our help center, we are cone.com/coronavirus, where again, we have like that downloadable cheat sheet, which has everything I've talked about today. We have the cash flow forecast Google sheet where you can make a copy of and use that as well. And we also have our Cone Community Facebook group. Feel free to join that. And like, that's cool as well. Oh, thank you so much. Yeah, it's been amazing. Yeah, no, appreciate it. Thank you so much for coming by as well. Hopefully, I've been able to help you with your questions. And like I said, feel free if there's anything else to just let me know. You can also reach me on my email at ben@wearecone.com. I haven't put that on here, but it's wearecone.com with Ben at the front of it. If you have any questions or need any help during this time. And yeah, ultimately just look out for each other, stay safe and well. Hopefully we'll all get through this on the other side, and it's just going to be a case of being there for each other during this time. If there's no other questions, there's loads of thank yous there, so really appreciate that. But if there's no other questions, I'm going to end the webinar there. And thank you all for coming by. Yes, there's no other questions. Perfect. Thank you very much, guys. I'll leave it there. All the best, and I will speak to you all very soon. Take care.